Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the complicated stuff that companies have to tell us. Today we're diving into a report from Morgan Stanley, and trust me, it's more exciting than it sounds. Think of it like this, it's like finding out what your super rich uncle is really doing with his money. It might surprise you. The report is called an 8K, which is basically a company's way of saying, hey, something important happened and we need to tell everyone right now. In this case, it's about their annual shareholder meeting and what was voted on. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for even deeper discussions. So this report is a Form 8K filed with the Securities and Exchange Commission, or SEC. It's like a snapshot of significant events. The date of the report is May 15, 2025. It's basically a recap of what happened at their big yearly meeting with all the people who own stock in the company. Morgan Stanley, as you probably know, is a huge financial company. They help people and companies manage their money, invest, and do all sorts of complicated financial things. Their headquarters are in New York City. This part is just some legal stuff saying they aren't using this form to announce something else, like a merger or a big sale. It's like saying this is just about this one thing, nothing else. Okay, this is a list of all the different types of stocks and notes that Morgan Stanley has, and what symbols they use when they're traded on the stock market. For example, their regular common stock, the kind most people think of when they buy stock, is traded under the symbol MS, and the exchange it's traded at is the New York Stock Exchange. They also have a bunch of preferred stocks with different symbols like MSCI and T and ECS. Traded at is the New York Stock Exchange. They also have a bunch of preferred stocks with different symbols like MSCI, MSTX, MSPI, MSCIPA, MSTA, MSPE, MSTA, MSTFA, MSPA, MSBA, MSTA, MSPA, MSTA, MSPA, MSTA, MSPL, MSPA, MSTA, MSTA, MSPA, MSTA, MSTA. Those are different types of stock that have special features. Finally, there are global medium-term notes Series A, which also trade in the market. Notes due in 2020, 2026 traded as MS26C, and notes due in 2022. This part is just checking a box to confirm that Morgan Stanley is not a small up-and-coming company, but a big and established corporation. Now we're getting to the interesting part. This section talks about a plan called the Equity Incentive Compensation Plan, or EP. Basically, it's a way for Morgan Stanley to pay its employees with stock. At the shareholder meeting, they voted to make some changes to this plan. They're increasing the number of shares available by 50 million, and they're extending the plan for 3 more years. If you want all the nitty-gritty details about this plan, you can look at the official document that's attached to this report. But basically, it's a way for the company to give employees a piece of the pie, which can motivate them to work harder and make the company more successful. This part is about all the different things that the shareholders voted on at the meeting. They voted on who should be on the board of directors. They voted on who should be the company's independent auditor, the people who check the books to make sure everything is correct. They voted on how much the top executives should get paid, and they voted on that stock plan we just talked about. There was also a vote on a shareholder proposal, which we'll get to in a minute. Here's where it gets interesting. One of the items voted was a shareholder proposal, which is something that the shareholders themselves want the company to do. In this case, the shareholders wanted the company to publicly report what's called the energy supply ratio. The shareholder proposal was not approved by the shareholders. Now we get to the actual voting results. First up, the election of directors. These are the people who are in charge of making the big decisions for the company. Shareholders get to vote on who they want to represent them. It shows how many votes each person got for, against, abstain, and also something called broker non-vote. Broker non-vote basically means that some shareholders didn't vote on that particular item. It does not mean the votes were against. Let's just highlight a few names here, looking at Rayford Wilkins Jr. The data indicates 1,242,807,304 votes, 86,280, 1,003, 4,500, Orden 4A, and 506,286 broker non-votes. This means it had about 6.5% against votes. Mary L. Shapiro got 1,316,745,917 for 11,908,063 against votes is lower at just under 538,738, 1,720%. So everyone on the board of directors were re-elected by a landslide. Next up, the vote to approve Deloitte and Touche as the company's independent auditor. This is important because it's about making sure the company is being honest and transparent with its financial information. 1,046 votes were cast in favour, 514 4,317, 1 for in 414, 14 5 and 86 votes were cast in favour. 55 Ibin, 176, 22116 against, and 1,404,317 16. 216 against and 14,404. 1,404, 4,004, 4,086,216 against, and 1,404,660 abstained. Then we have the vote on the executive compensation, or how much the top bosses get paid. This is always a hot topic because shareholders want to make sure the executives are being paid fairly but not excessively. Over 1.2 billion voted for the compensation packages, while around 56 million voted against it. And finally, we have the vote on the Equity Incentive Compensation Plan, which we talked about earlier. Over 1 billion people voted for the plan, while 279 million voted against it. So most people were in favour of giving the employees more stock. And finally, there was a vote on the shareholder proposal that requested annual disclosure of the company's energy supply ratio. Only around 171 million voted for it, while almost 1.2 billion voted against it. So the shareholders did not want the company to have to publicly report its energy supply ratio. This last section is just listing all the different documents that are attached to this report, like the actual Equity Incentive Compensation Plan. So what does all this mean? Well, it tells us that Morgan Stanley shareholders are generally happy with the direction the company is going. They re-elected all the directors, they approved the executive compensation, and they approved the plan to give employees more stock. The key here is to watch if future reports start showing more against votes. That could be an indicator of potential trouble in the future. Looking at the company's direction, it seems pretty stable. The shareholders are on board with the management's plans, and the company is continuing to reward its employees with stock. However, the rejection of the shareholder proposal about the energy supply ratio could be seen as a weakness. It suggests that the company may not be as transparent as some shareholders would like it to be. One notable risk is always the overall health of the economy. Financial companies like Morgan Stanley are very sensitive to economic ups and downs. If the economy goes into a recession, Morgan Stanley's profits could suffer. Another risk is increasing regulation. Governments around the world are always looking at ways to regulate the financial industry, and new regulations could make it more difficult for Morgan Stanley to do business. In conclusion, Morgan Stanley seems to be in a good position right now. The shareholders are happy, the employees are motivated, and the company is profitable. However, there are always risks to keep an eye on, like the economy and regulation. Alright, that's our breakdown of Morgan Stanley's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.